Welcome to the Confident Retirement Podcast. Is doing the most important things alone a good idea? How comfy are you with your choices when it comes to life's biggest decisions? What is real peace of mind with financial confidence, and how can you get it? Kris Flammang and Mark Peachy are the founders of LPF Advisors in Sarasota, Florida. On the show, they bring together the best and brightest minds to share with you how to have a more confident financial picture. They empower listeners with simple, common sense and financial wisdom. And now, here are your hosts from LPF Advisors.
Okay, I want to welcome everyone to the next episode of the LPF Advisors podcast, a comfortable retirement podcast. I'm your host, Kris Flammang. And today I have the honor and pleasure of having Steven Sless with me. He is the owner, operator, president of the Steven Sless Group. They are the reverse mortgage division for PRMI that has nationwide coverage. Now, although they're pretty large, they do operate as a family, and their mission statement is to help clients achieve financial security and peace of mind that they can comfortably age in their home that's suitable for them for their entire lives, serving their long-term needs. Steven, welcome to the show.
Kris, thank you so much for having me. Pleasure to be on.
Yeah, let's have some fun. Let's dive in. So I'm always curious. I'm a people person. I'm curious in people's lives and their history. So why don't you run me through a brief history of how you got to where you are today?
Yeah, always a great place to start. I appreciate it. I got into the mortgage industry in 2003, and from 2003 until 2008, I did what most mortgage folks do, and that's some refinance, some purchase business. At that time, subprime was a big market. We all know what happened with that in 2007 and 2008. In 2008, my company faltered. The company that I worked for faltered, and I had to make a decision whether or not I'm going to stay in the mortgage industry or whether I'm going to go try to do something else. And I had learned about reverse mortgages a little bit, and I had seen that there were some people that were in my office that were starting to have some success with reverse mortgages given the growing demographic. And at the time, I was in my mid-20s, Kris, and I'm like, how in the world am I going to communicate with seniors, right, in their 70s and 80s? And it scared me, and I shied away from it at first, but through my research and learning about reverse mortgages, I discovered what a powerful tool they are, and I immersed myself in it. And by doing that, I learned that reverse mortgages aren't some tool or some mechanism that's going to steal your home or the government's going to take your, all that is bogus. I dispelled a lot of the myths and misconceptions myself through my research, and here we are, 2021, and myself and my team have been exclusive to reverse mortgages since, and we haven't looked back.
Okay. So I'm curious if you could look back to 2008 when you were getting started and you could give some advice to your younger self. All right. What do you think that one piece of advice would be?
You know, I've been on this personal branding journey for quite some time now, and I wish I started that sooner. I've been able to develop a brand, and we've been able to hire a team, and we've developed this team brand where we are the national leaders in reverse mortgages. And I've discovered how messaging and how communicating is vital to any practice, right? Whether it's a financial services practice, a reverse mortgage practice, it's all about communication. It's the way that you communicate your message. It's the way that you position yourself. It's the way that you carry yourself. I wish I had known that a little bit more in my 20s when, but in your 20s, you want to go out and you want to have fun and you want to, do all the things that 20-year-olds do. It wasn't until my early 30s where I really took the personal branding journey more seriously. And so to answer your question, I think if I were to go back and have a conversation with the younger Steve, it would be, take yourself a little bit more seriously. But, things have worked out pretty well.
Right. It's never too late to start. And I think there's a lot of people that like to go back and tell a 20-year-old self, give them some advice.
Oh, yeah. Oh, yeah.
I'm in that category too. All right. So let's jump into some of the high-level details. I'd like you to start by explaining in simple terms what a reverse mortgage is and kind of what the structure of it is.
Yeah. So a reverse mortgage is a mortgage loan, not a whole lot different than a traditional mortgage loan. However, a reverse mortgage provides flexibility unlike any other mortgage product. And so if you're 60 or above and you own a home and you have relatively 50% equity, you can leverage your home equity and turn that equity into tangible funds that you can repurpose to live a more comfortable retirement. It's the concept of using housing wealth and incorporating that housing wealth into a more comprehensive financial plan to strengthen, protect, and preserve the overall retirement strategy. I think reverse mortgages historically have gotten a bad rap because folks just don't understand them. But in the most simplest form, it's just a mortgage. It's a mortgage, however, that allows you to either defer the payback until you leave the home and have that flexibility of not having to make a monthly mortgage payment later in life where, look, cash is king and cash flow is critical to being able to live a comfortable retirement.
Okay. When someone might be thinking about doing that, what is the typical process that someone goes through when they're entertaining or going through getting a reverse mortgage?
Yeah, so it's the educational process, which is it's where we always start. When we sit down with our clients, we perform a financial analysis, a financial assessment, and we determine suitability, not just do they qualify, but are they suitable for a reverse mortgage, right? If somebody were to come to me and say, hey, I want to take out a reverse mortgage, Steve, the first question I'm going to ask is, how long do you want to remain in your home for? If they tell me, 3 years, it's not the right product for them. This is a long-term solution. It's a mechanism which allows the funding to be able to age comfortably in place in the home you love, which is particularly important today after we're coming out of this, COVID world where a lot of deaths happened in long-term care facilities and nursing homes. And we're having a lot of conversations today with adult children who want to be sure that their parents can live comfortably in place. But to go back to your question, Kris, where we start is education. We want to explain how reverse mortgages work. We want to explain not just how the reverse mortgage itself works, the product, but how it can fit into a retirement plan, ultimately being able to marry with your other investments to extend the overall plan. So we look at it from a very holistic standpoint from the top down, with reverse mortgage being just one piece to the overall puzzle.
Yeah. I love what you said there about the difference between just being able to qualify and is it suitable, right? Because a lot of times professionals or people think that they're one and the same, right? Yeah. If you can qualify for it, well, then it's suitable. That is oftentimes so wrong. And I find that in our business where just because the person qualified or could buy it, it doesn't mean it's necessarily the best thing for them. I remember I was standing in line at the bank one time and they had one of those big posters there and it was saying, take out an equity loan, right? And then it was listing all the things that you could use the money for. Yeah. And a lot of them, some of them were like, college education or home improvements or something like that. But then there were some other ones like take a dream vacation and all that. And I thought to myself, yes, they could do that, but is that really a good idea? Is that in their best interest? Is that suitable for them?
Sure.
To do that.
And in some cases, the answer is yes, right? We want to be able to enjoy life and use the money that we've earned over the years to live a comfortable retirement. And sure, vacation's a big part of that. Yeah. But I resonate with what you're saying because all too often, especially in the reverse mortgage world, I don't want to say most, but some originators, particularly traditional mortgage originators that dabble in the world of reverse, right? Mm-hmm. We made a decision in 2008, like I referenced, Kris, we were going to do reverse and that's all we were going to do. We weren't going to be a jack of all trades. We were going to be a master of one very niche product. And in retrospect, it was a great decision. But because we specialize in it, we look at reverse mortgages in a different light, in a different fashion than most other traditional mortgage originators look at. They're looking at it as another product within their service offerings, right? Really no different than another FHA loan or a VA loan or a cash out refinance, construction loan, so on and so forth. When you come to us, someone who specializes in reverse mortgages, we're talking to your financial advisor. We're really in the weeds with you. We're figuring out, okay, if you structure it this way, what does it do to the overall retirement picture? can we extend your retirement plan by 10 years by being able to take out a reverse mortgage and strategically use this money? And that is kind of the crux of it, is we're looking at this from a very strategic, holistic standpoint, not take out a reverse mortgage and take a bucket of cash, but using the funds appropriately at the most opportune times to grow the overall portfolio.
Okay, so who might it be suitable for, right? What's an ideal couple or a person where it would be suitable?
If you asked me that question 10 years ago, Kris, it was a very different answer than how we sit here today. 10 years ago, reverse mortgages were a loan of last resort, right? If you had run out of money, if you had exhausted your investment portfolio, yet you still had a reasonable amount of equity in your home, those folks were taking out a reverse mortgage. And that was our demographic. That was our clientele. Today's reverse mortgage borrower is very different. And a big reason for that is because of the research that's come out, particularly over the past 5 or 6 years, from the Wade Fowles of the world, Jamie Hopkins, Tom Hegna, just to name a few. What they've discovered through their research, Kris, is that when you use reverse mortgages proactively, as opposed to using them reactively, it really can make a profound difference in extending the life of an investment portfolio. And so today's clients are very savvy. They're very strategic. We're doing reverse mortgages for millionaires. There's jumbo reverse mortgage products that allow us to lend up to $3 million on homes valued up to $10 million. Now, sure, we're still able to help those folks who are short on funds. They're using it more of a loan of last resort, but the reverse mortgage was never really designed that way. It was always designed to support your other retirement assets, never to be a loan of last resort. And that is finally coming to light and seeing the surface today.
Great. Now, there's probably situations, not people, but there's probably situations where it is not compatible, not suitable, doesn't make sense. So can you give me kind of an easy example of where that's the case? I know you mentioned they have less than 50% equity in the home, but that's a qualification thing, I think. But give me an example of where it doesn't make sense.
Yeah, I think if they're not looking to be in this home long term, and when I say long term, it's probably more than 5 years, oftentimes more than 10 years. We really want to be able to structure a reverse mortgage to be able to support them throughout their life in the home. There's closing costs involved, and we look at that as well. I mean, we got to be able to feel good and show clear benefit to our borrowers that it makes sense for them to take out this reverse mortgage. If they don't have enough of a baseline income to support the qualifications of the loan. And there's 3 qualifications, Kris. You got to pay your taxes, you got to pay your homeowner's insurance, and you got to maintain the home, because guess what? You still own the home. Right. And that's a big misconception, that when you take out a reverse mortgage, somehow you lose ownership. That's not the case at all. You own the home, so it's your responsibility to pay the taxes, the insurance, and maintain the home. So through our analysis, if we discover, maybe they're only on Social Security, and what happens if we place all this money in their hands from their equity and they use it all? Because we don't know what they're going to do with that money. We can encourage them to seek help, can talk to an advisor, but at the end of the day, that's their money. They can manage it however they see fit. So there has to be enough of a baseline income to be able to cover the taxes, the insurance, and maintain the home for us to be able to originate that loan. And so those are the two major suitability factors. It's the income and then their willingness and ability to remain in the home. Their ability is really important as well. They may be in a 4-story home with lots of stairs, yet they're having some difficulty getting around. Do we want to put them into a reverse mortgage, which is more of a long-term solution, if we feel that they may not be able to stay in this home for very long because it's just too much home or there's too many stairs and so on and so forth.
Yeah. And I know that there's some government regulation. It's a highly regulated industry. Can you speak to that on a high level on what role the government plays?
Yeah, there's been a lot of new safeguards and regulation that have come out, particularly post 2015. And so, Kris, prior to 2015, if you were over the age of 62, you had at least, at that point, 30 or 40% equity. You needed a lot less equity back then, and you had a pulse, right? You were alive. We could lend you money on a reverse mortgage. And what happened was you had those folks that were destitute, that had already run out of money. They were turning to their home. They were using all that money. It was gone just as quickly as it came in. That's how quickly it went back out. And they were in a much worse position after taking out the reverse mortgage. Unfortunately, there were a large number of senior homeowners that were foreclosed on. They had a reverse mortgage. They weren't foreclosed on because they had the reverse mortgage loan. They were foreclosed on, Kris, because they failed to meet the obligations of the loan. And so in 2015, the government stepped in and they came out with what we call now the financial assessment, or FA in our industry, where we have to look at income, credit. We have to qualify reverse mortgage borrowers in a similar fashion to the rest of the mortgage industry. You have to have credit, you have to have income, you have to have equity. So we have to look at all of those things now and run them through the same underwriting guidelines as traditional mortgages, because we don't want folks taking out reverse mortgages and being in a worse situation later on down the road. We want to improve their overall financial outlook. That was one of the biggest changes. And what that's done since, prior to that change, the foreclosure rate on reverse mortgages was close to 9%. We stand here today, it's less than 1% nationally. And so that change in and of itself really helped to solidify the program. It really helped to strengthen the program. And post 2015, that's where a lot of the research has been done. Now that the product is a much stronger version of what it was before, now these retirement researchers have come in, Kris, and they've identified ways to properly and strategically use the reverse mortgage.
And is there oversight or are there regulations on people who provide them? So who can provide a reverse mortgage or offer them to consumers, and how are they regulated?
Yeah, these are some of the most heavily regulated products on the market, and rightfully so, right? They're for seniors. Seniors are a very protected class, as they should be. So yes, these are very heavily regulated loans, the products themselves, but also the lenders. I have a mortgage license. I'm very protective and proud of that mortgage license. It allows me to have the career that I have. So not only does the regulators do random audits and they look at these loans and they make sure that, me personally am doing business on the up and up, that my company is doing business on the up and up, but they also audit our files. They go through our files. They make sure that they're looking at all the parameters to ensure that we're putting the right people in the right loans. Mm-hmm. So, Kris, there's also independent counseling. So every reverse mortgage requires an independent third-party HUD counseling there as a checks and balances. And so the counseling can be done face-to-face or over the phone. And that's the borrower's opportunity to have an uninterested third party speak with them about the loan, answer questions, confirm that they're working with somebody that is, one, licensed, and two, meets the standards to be able to originate reverse mortgages. And that counseling is critical because that is an extra built-in layer of protection that is not the case on other mortgage products.
So that kind of leads me into, and you mentioned some of these, and what do you think is probably the biggest misconception, right, with the reverse mortgage?
I think there's two.
The consumer has. Okay.
I think the biggest one is that they're only for people that are broke. And that's absolutely unequivocally not the case at all. They're actually better for people that don't need them, because you can set up a reverse mortgage and put the funds that you qualify for in a line of credit. And that line of credit, Kris, can be used as a buffer asset. You know the power of buffer assets, right? Having funds outside of the investment portfolio to hedge against corrections in the market, hedge against sequence of return risks, and the list goes on. So that's the first and probably the biggest misconception, is that they're only for people of last resort. It's actually better the opposite way. The other misconception is that the government or the lender somehow takes over ownership of your home and that you're renting it back, or you lose ownership or you lose control. And that's not the case. At the end of the day, Kris, it's just a mortgage, right? There's a lien on title, no different than any other mortgage. The key difference is you can defer payback until you leave the home. And there's a variety of payout options that the reverse mortgage allows that other mortgage products simply don't.
Yeah. So go through those briefly, the payout options. So you go through the mortgage process, you get the reverse mortgage, and then you have this capital. How can you access that?
Yeah. So when we're setting up the reverse mortgage, we're asking questions to help us determine how best to structure the loan. The payout options are as follows. One, you can take out a lump sum payment, right? Where we say, here's how much you qualify for, and you take all of that money and you manage it however you see fit. The second option is a term payment and we see this a lot, Kris, in helping clients defer Social Security payouts, right? So if you're trying to make it from 65 to 70, you can turn on funds from the equity in your home for, let's say, 5 years. You take the funds for 5 years. When 5 years hits, you turn on Social Security, you turn the equity from your home off, kind of like a spigot, right? You just turn it on, turn it off. Very flexible that way. So a term payout provides some flexibility to receive funds from your home for a select period of time. There's also a tenure, which is in essence an income annuity from the equity in your home where the mortgage lender sends you a monthly check every month. And it's regular cash flow. And we see that a lot for folks that need regular cash flow. Maybe they're $1,000 a month short, or just having an extra $1,000 a month will make all the difference for them to live a better lifestyle. You can turn it on that way. You can also take out a line of credit, and I'd referenced that a few moments ago, where you take the pool of funds that you qualify for, you put it in a line of credit. Kris, a reverse mortgage line of credit, unlike any other line of credit, has a guaranteed rate of growth. And that guaranteed rate of growth is 0.5%, 0.5% over the interest rate on the loan. So today's interest rates are about 3. You're going to get 3.5% growth rate on that line of credit. Think of that line of credit, Kris, as a credit card, and your limit on that credit card is increasing every year, giving you more borrowing power over time. And then you determine when and if to pool those funds. And you can also customize all these payout options. So you can set up a line of credit in addition to setting up a term or tenure and receiving some money up front. And that's really where the customization and us being able to tailor a reverse mortgage to the specific needs of our client comes into play.
So yeah, it sounds like the flexibility has gotten better over the last few years in terms of the way people could receive the money.
Yeah.
Okay. I'm curious what you really like about your business right now. What are you most enjoying?
Oh man, we are on the forefront of changing the way retirement is done in America. I think for the longest time, the home equity, that housing wealth. And Kris, for most clients 62 and above, the majority of their net worth lies within their home equity. And so coming in and helping to teach them how to use that equity to create a more comfortable retirement, that brings a lot of joy to me and to my team. We're also working with a lot of financial advisors, and we're changing financial advisors' mindset. Every conversation we have with a financial advisor, every scenario that we're able to come in and show them, okay, if you take out this much equity from the reverse mortgage, instead of maybe your client needs to take out 4% per year to live their normal lifestyle. And we can come in and say, let's supplement with a reverse mortgage. And now we can bring that 4% down to 2%. What does that do? Number one, for the advisor's assets under management, for the client's portfolio, it extends the longevity of that portfolio, and it allows the advisor to manage more of their client's money for longer. So it's a win-win. And we're really on the forefront of that. We're very, very proud of what we do. We're also on the forefront of marketing, and that's something that I enjoy quite a bit. I have a YouTube channel that I manage. We're big into video. We're big into educating. And the way that we do the majority of our educating is through opportunities like this. So I thank you, Kris, for having me on. And we create a lot of content, and our content gets viewed quite a bit, and we receive a lot of business from that content. And that's fun for us to do. I love creating videos. I love speaking about reverse mortgages. You can probably see I tend to go on tangents about reverse mortgages because I'm just that passionate about it. But I just enjoy, and my team really enjoys, just being on the forefront of this seismic shift in the retirement planning industry. We're also helping clients to fund long-term care, whether that's self-funding care or funding the actual insurance policy itself. We're helping in gray divorce. There's an epidemic of seniors getting divorced right now, and a reverse mortgage is a fantastic way to divide assets later in life for couples coming out of long-term marriages. And so, boy, I can go on and on and on, as you can see, but we enjoy what we do. We love what we do. We're so passionate about what we do, and we're still just getting started.
Awesome. Let's shift gears a little bit. I'm going to go into the mind of Steve for a second. The memory.
Dangerous place to be, man.
Yeah. All right. Well, we'll see. We'll see where it goes. So what's your first memory of money? It could be as a kid or an adolescent, or maybe it was high school or college.
That is such a great question. So I grew up, Kris, we didn't have a lot of money. We didn't really have a lot of needs, right? I can't say that I didn't have what I needed or wanted growing up. My parents worked their tails off to be able to support my sister and I. My mom worked 2 jobs. My dad worked long hours. And so growing up, money was always a topic of conversation around the house, or the lack thereof of money was always a topic of conversation around the house. And that was probably my first memory, is just hearing my parents stress over being able to support us with what we need. And I think they did a heck of a job, especially looking back now and thinking through your question. I think they did a heck of a job, but I think that would be my first memory of just not having a lot of money growing up.
Yeah. So how do you think that affected you then, or how did that shape you?
It's my driving force. I mean, I have 2 young kids. My oldest is going to be 5 in August. My little one's 2.5. And I don't want them to grow up hearing those same type conversation. And it's just driven me. The foundation that my parents laid of hard work and this blue collar attitude and blue collar mentality, even in a more white collar job like the reverse mortgage industry, I think I've still been able to hold true to those blue collar ethics. And that's been my driving force throughout my entire career.
Yeah, those things carry over. It doesn't matter what collar you're wearing, right?
Yeah.
So what do you consider then to be your biggest life accomplishment? This could be personally or professionally or both.
Oh, my kids. Just being able to enjoy watching them grow up. We have just 2 amazing kids. And of course, finding my wife and marrying my wife. I'm really proud of our family dynamic. And that's without a doubt. All the accolades and professional accomplishments aside, it's all about family at the end of the day.
Keeps us grounded.
Absolutely.
For sure. And it's nice having a wife to bring you back to earth.
Yes.
Right? You're not as important as you think.
Does that very well.
Yeah. All right. So let's think about going forward. What do you see as your biggest opportunity for your business?
The biggest opportunity is without a doubt being able to capture more market share. So Kris, in the reverse mortgage world, there's only 1% market penetration. So of all the folks that qualify for reverse mortgages, only 1% actually have a reverse mortgage. It's an unbelievable opportunity. And the only reason that is the case is because there's a lack of education out there. There's a lack of folks like us that specialize in this very, very niche-y product, the reverse mortgage world, where we're fighting all these myths and misconceptions every day. When you say the word reverse mortgage, most folks have a visceral reaction. And who wants to deal with that? Well, we do, right? We're on the forefront of it. We're battling that every day because we know what an incredible product the reverse mortgage is. And so the biggest opportunity is to grow market share. 10,000 people a day, Kris, are turning 65, and that's going to continue until the year 2030. For the majority of these folks, their home is their largest asset, plain and simple. Look at the cost of healthcare. Look at the cost of long-term care. There is no doubt that the home equity it absolutely has to play a role in paying for care, funding care, both long-term care and healthcare. And if you look at the accumulation of wealth in the country, what's in retirement accounts and 401ks and IRAs compared to home equity, the home is where the wealth is. Home is where the heart is. And so you want to be able to age comfortably in place in a home you love, but the home is where the wealth is. And so we're on this journey, we're on this mission to incorporate that housing wealth with the investment portfolios and to tie the two together to strengthen the retirements for all Americans moving forward.
All right. I like that. That's good. I'm going to stretch you a little bit. You have to think. What do you think is your biggest obstacle business-wise going forward? Biggest thing you have to overcome?
We have 2 obstacles going on right now. The first of which is been the obstacle in the reverse mortgage space for as long as I've ever been in it. And that's that visceral reaction that most folks have when you mention reverse mortgages. And we are trying to overcome that by creating content that is having an advanced conversation, not the Tom Selleck commercials, which are defending reverse mortgages. And look, I love Tom Selleck. I love that company. That company is a big partner of ours. Tom Selleck drives the industry. Whenever a commercial airs, people call. However, Tom's not having an informative conversation with you. And so through the content that we are creating, we're having these conversations about the advanced planning strategies that reverse mortgages can open up. And in doing so, we're organically dispelling a lot of these myths and misconceptions along the way. Our second challenge right now, and probably the most important one, is we're going through some serious growing pains. And I'm just divulging it all to you right now. I just took over the reverse mortgage division for primary residential mortgage a couple months ago. And there is a huge interest from all of our forward mortgage originators to be a part of this growing demographic, to grow their reverse mortgage practice. And so the majority of my day is helping them to grow their business and helping them to better serve their referral partners, whether it's their realtors using a reverse mortgage to purchase a new home, whether that's their financial planners, sitting down with them and having just hand-to-hand combat, having these conversations about, look, I know you may think one way about reverse mortgages, but research says otherwise, and here's what we can do to help you help your clients. So we got to get over those growing pains. I need to grow my team, and we're trying to grow our foundation and infrastructure, because there's going to be a wave of reverse mortgage clients here at PRMI. We have full intentions on becoming a top 10, top 5 reverse mortgage lender inside the next 24 months. And we're going through that journey to get there. And with that journey comes a lot of challenges.
Yeah, good changes or good challenges, but certainly growing pains.
Yeah.
So if there was something that you could change right now, do you think it would be that? You'd be on the other side of the growing pains? Is that probably what it would be?
See, I love going through the growing pains because it's all part of the journey, right? It's that journey to the top that I enjoy the most. If I were going to change something about the industry right now, I would change the way that people talk about and promote reverse mortgages, right? Yep. Most of our industry talks about paying off a mortgage and eliminating your mortgage payment, and you don't have to make a payment anymore. And that's true. But let's talk about the flexibility. Let's talk about what happens when you incorporate housing wealth with a comprehensive retirement strategy. Those are the conversations that's going to drive our industry for the next 25 years. It's not, we got to get ourselves out of that loan of last resort mentality and start having these more difficult conversations about long-term care planning, divorce planning, estate planning, and doing so with a reverse mortgage.
Maybe they should just consider renaming it.
Oh, I've thought about it.
You probably wake up from nightmares saying, not reverse.
If it was called a retirement mortgage, totally different industry.
Right.
Forget the 1% market penetration. There'd be 50% market penetration.
Yeah.
And I do think, Kris, we're going to get to that place. When I always tell this story that in 10 years, and I really do feel this way, in 10 years, when folks that are, 62 plus are sitting at the dinner table, they're out with their friends, the conversation's not going to be, should I or shouldn't I take a reverse mortgage? It's going to be, hey, where did you get your reverse mortgage from? What lender did you use? It's going to be commonplace in retirement planning because it's going to have to be. The numbers prove it. Home equity is where the money is. It's not in retirement accounts. But we're still on that journey to get there. And I'm confident that in 10 years, those are the conversations that are going to be had around the dinner table.
Yeah, and there is a savings problem in the country in terms of when you look at what people have set aside, the average 401k balance or the average investment portfolio, there's definitely a savings problem. Maybe you and I should try to trademark that term, retirement mortgage. Yeah, we should get on that today. We should do that today. If people want to get a hold of you or contact you, what's the best way to do that?
Yeah, they can visit us online at theslessgroup.com. And it's theslessgroup.com. Or give us a call, 410-814-7575. It's 410-814-7575. We can facilitate reverse mortgages everywhere in the country. I have 2 branches, one in Baltimore and one in San Diego, California. And we're licensed across the country, so we can help serve your reverse mortgage needs wherever you are.
Okay, fantastic. Steve, listen, I want to thank you for joining us today on the Confident Retirement Podcast. And I want to thank everybody for tuning in and watching. You've been here with me, Kris Flammang, and Steven Sless from the Sless Group. We're taking the retirement confidence of everyday Americans to another level one episode at a time. And we thank everybody for tuning in, and we will see you and listen to you on our next episode. Take care, everybody.
You've been listening to the Confident Retirement Podcast with Kris and Mark from LPF Advisors. For more information on them and retiring confidently, please visit lpfadvisors.com. If your ears are pleased and your mind is now at ease, do share the program with your friends and subscribe wherever podcasts are found.